Good morning, traders. It is 8:03 a.m. Chicago time on Thursday, December 11th, 2014. This is a rollover day for U.S. indices. Just a reminder that the video will be based on March 2015 prices. I'll start out by saying that I recognize that many people do not like to roll over until the volume in the March contract overtakes December. However, the official rollover time and date is now, and it really doesn't make much of a difference in my analysis whether we roll today or tomorrow. Yes, the volume will be lower, but the volume for the way I'm approaching the market is more important in the day session, and in the day session is basically going to involve just a focused effort to roll into March going forward, and much of the participation is going to be in March going forward. So even though the December contract is going to have many more contracts traded on it, it'll catch up as the day goes along during the day session. Let's start with the regular news. Huge day for central banks. Initially, no surprises. New Zealand Central Bank, Bank of Korea, Philippines, and Indonesia, as they all kept their policy statements steady. Norway surprised everyone by cutting rates by 25 basis points. The second TLTRO operation left the door open for potential ECB QE, as it came in just below expectations of 130 billion. This was higher than the September uptake. Swiss National Bank left both its 3-month LIBOR target rate, Euro, US, Swiss franc floor unchanged at 0% and 1.2 respectively, as expected. U.S. initial jobless claims came in at 294,000 versus 297,000 estimated, so slightly better. Continuing claims 2.514 million versus 2.34 million, slightly worse. November advanced retail sales 0.7 versus 0.4, better. Ex auto 0.5 versus 0.1. Import price index month on month for November, negative 1.5 versus negative 1.8. And then the Treasury Secretary Liu said that lower oil prices are like a tax hike for the U.S., not expecting lower shale production as a result. So there's a cap on crude oil prices for now. And then finally, the Russian central bank raised its 1-week auction rate by 100 basis points to 10.5%. Russian central bank stated that it was ready to raise rates further due to high inflation devaluation expectations. It forecasts 2014 inflation at 10% and could exceed that level in Q1 2015. Okay. Real quick, as a reminder, I'm a registered broker as well as a trader, and I'm required to read this disclaimer, which I have not done yet. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. Let's take a look, and thanks, Tom, for the reminder. Let's take a look at the charts and see what the story is. So I'll start out today by again bringing up this funky looking chart. You may not be used to it, but it's just a different way of representing the microcomposite. What this is it's a volume profiling chart that starts on the 31st, on the open of the 31st, a gap day up, and it includes all action. I did not include yesterday yet, just so we can see how this is working. This is a 60-minute, and what this is doing is it's putting dots wherever there's volume, and it crosses the entire chart, so we can see where the current price action is intersecting with where volume is. So where we've been stuck for some time now, you can see very high volume, the highest volume in the area is outlined by this black line. The point of control now is 2060. 2060 was 2067 before that. The upper composite here was 2067. Now 2060 is the most traded price in the area. We're trading below it. Again, this is a March 2015 chart, so my prices may be different than yours. As I posted on Twitter, the premium difference between the March and the December contracts, -7. So all of my prices here are going to show that the peaks and bottoms are 7 points below where the December contract was. Okay. And the reason for that is backwardation, which I'll cover in a minute. So we break lower below this high volume area, and then the other day, unfortunately, it's not as clear here in this contract, but the other day we pushed through and bounced off of the equivalent of 2042 in the December contract early on, and held it, and then now we're pushing right through that. A small test day before yesterday as we rally up. Yesterday took all of that back. Expected there was a decent probability of a snapback yesterday, and we got that. I did post about that on Twitter. But the day before yesterday, you could see here it pushed right into this high volume area, and right back to the prior day's point of control. Here's the point of control of Monday. We pushed right to it. I covered that in yesterday's video. And then yesterday we were unable to get back up into the prior day's close. We tested the value high of Tuesday, and we fell off, and we fell off pretty hard later in the day, right through the area right through the area we held on Tuesday, and we're still pushing into this low volume area. Right now, 2014 is key. 2017 is the low. 2014 is a key LVN below us. You could see that there's price rejection in this area over several days back in November. This is likely to be our initial support on a test. And the market's holding higher prices this morning. So overall, what have we done? We moved from one high volume node into the next high volume node. We're currently trading 2027 and battling right here. We've tested a little bit below, but we're stuck at the second highest volume area. So this is no surprise given the way auctions work. This is no surprise that it moves from the high volume price through rejected prices. We did bounce off of some of these LVNs here intraday to the next high volume price here. As I indicated yesterday, the price was 2030 to about 2035. And of course that's adjusted now down to 2023 or so to 2030. This is the key area that we're stuck in right now. This is prior acceptance, and we've tested below it. We're coming back through it. If you look at the overnight session, you could see that it's basically drifting sideways through the Asian session and is finding support and is trading in this area. The bulk of the volume is right in the middle of that high volume area. So this area is being respected. There's an LVN zone above us to 2034 today. Key for today. You might want to note that level down. 2034. Basically what this is telling us is as we push through the overnight high of about 2030, the 2030 to 2034 is likely to have a slipstream effect, sort of a quick run up. You can see it better here in the market profile right here. These single prints with the low of the single prints at about 2033, 2033 quarter on the market profile, but with the volume profile, it's a little bit higher at 2034. So I would not get short in this zone here. There's very little to hold until the next acceptance area, the next high volume area, and the next potential resistance zone. Also yesterday's mid. So if a push through, what the point is here, a push through the high, let it go. I would not fade that move. I would not short that move through the high, looking for rotation back to yesterday's close. Anything can happen. Everything that I'm telling you is essentially based on market behavior and what the market has done in the past. And so the market has a tendency to do certain things, but the idea here is not that the market needs to prove me right. Just get over that. I know it's important for people to look at somebody talking and figure out if they are able to predict the future. My goal here as a trader is not to predict the future. And this is the point of these trader bites, is to come in, have a reasonable, probabilistically based plan for pretty much any scenario that could happen, and then to execute on that scenario. Once the market opens, it's very important to approach things that way. So the goal here is to come up with several ideas of what the market's likely to do, and then let the market prove which one is appropriate, so that there is no bias. I don't come into the market with any specific bias. I don't try to fight it by proving that I'm right. My goal here is to predict the different scenarios that it could play out. I discussed with you the highest probability scenario, which is called the key trade of the day, or the key play for the day, and then let the market prove or disprove it. Disproving it is valuable information. Just remember that. The overnight profile is not telling us very much. Weak high, somewhat weak high. The point of control is still below us, and it could very easily snap back down into the 2021 area and test that closing price at 19.25 on the open. We have to wait and see what the open does. It's an interesting location that we're in currently. Looking at yesterday's trading, let's scroll back to the open. Here we are looking at yesterday's trading, open at 46.50, an open auction in range OAIR open. Finally, we get the largest swing being 42.25 to 47.25. The opening swing could have been either one of these, doesn't matter. But once the market broke through the opening swing, or this last low here, and remember, this gray area is value from the prior day. Once it broke below, we basically have to give up on the closing the gap above, especially since on the retest, the market held the opening swing low and the mid. This is a great opportunity here. Again, the market gives us another opportunity with about 1.5 points of heat on that trade. Yet again, an opportunity on the mid, but once it breaks lower, the mid cannot keep up. And then from there, you're trading basically an impulsive move, this impulsive move here, and looking for a continuation lower, which we clearly got. So it was once the market moved away from this mid, it was very clear that we have a motivated seller here, and we're starting to have to trade based on price action alone. The target below is 19.25. This 19.25 is a naked point of control from the 10th of December. Now it's closed, so we have to look at the 10th of December as the template day. Let's pull that up. Switching to a 15-minute here. So we scroll back to the 10th of December. I apologize. Hang on. wasn't the 10th of December. So that's where it is currently. But what I was looking at here is the template day. And I was looking at this lower HVN at 17, using this as a template day, looking at 17 to be tested. It's also an MCHVN, and then yesterday's action pushed right through that 17 from that day by 3 ticks to 16 quarter. That's when we got the bounce. This is a small level. It's not like I'm going to stand in front of it and try to buy this smaller level. But the idea behind a template day is as the market drops and trades through where prior auctions have taken place, you're going back in time and looking at what happened on those days. Very important to do that, to look back and see what happened the last time we were here. Who was active? What kind of areas were created? For example, the break of 13.5 here, the 13.5 low gives us, when we look at this template day, we don't get very much. It doesn't give us very much to go by or to lean on as far as targets until we get down into this MCHVN at 2008.50, 2009. And even then, there's a fair amount of volume here. So we expect some support from 2009, 2010 in the March contract down to 2005. I would be looking for some sort of a bounce rotation. So it's a combination. You're looking at a combination of what happened here the last time we were here. This is the first time we've been back here since the 7th of November. I read that wrong. And so for today, what are we looking at today? After having a huge range day yesterday, from 2047 quarter to 2016 quarter, I expect today to take some of that back. The expectation is that prices are likely to attract the intermediate to long-term trader at this point. And I expect prices to trade yesterday's range. I do not expect lower lows today. The market actually had a decent bounce and put in an okay low, not so great. We don't have an excess low here, as you can see on the market profile. There's really not an excess low showing us the prices were unfair. But overall, it looks like it's likely to be a resting day. So I expect the market to chop. I expect an open auction out of range or in range this morning, and I expect it to test both sides. But more importantly, I expect it to, if it fails to make any push towards yesterday's close at 19 quarter and the point of control, then it could easily climb right through 34 for a little pullback, and then rotate again to push for 35 through 37 and 40. So be careful on the way up what you fade or what you short, as the long-term trend is bullish. Okay, so if we look at this chart, looking at the bigger picture, here we bounced off of the 29.50 equivalent in the March contract. Yesterday we opened higher and broke through it. Or Tuesday, we opened higher and broke through it yesterday, and we're almost at that LVN area below, and the market's holding. So I expect, just like we've done in the past when we have these sorts of days, I expect that today will likely be a responsive day, a reactionary day up. That's the primary idea. If it does break lower from the open, from where it is, it's trading 2027 currently. If it does break lower and makes it down to 2019, then I'll start looking at the levels below. And again, it's important for you to look back at where we were before and determine what those days did as templates. But also 2014 becomes the key area to test, and then beneath there you have 2005 as the next high volume node to test. Okay. I just want to. Somebody asked me about backwardation. Backwardation. It's probably an Investopedia, something you can easily look up. Backwardation is when the price of the future is lower than the price of the present, meaning the cash value right now is trading at a higher price than the future value. It's kind of like a negative mortgage payment. And the reason it happens in these indices is because the interest rate or the cost of carry to hold these contracts to expiration in March, the interest rate's so low that dividends are providing a higher return. And because dividends are paid to those who are holding the cash instrument, the stock, and are not paid to the future, they are discounted in the future price. And so therefore, the index is, if you take the SPX right now and add interest rates, the cost of interest rates over the number of days remaining to expiration, plus the value of the dividends, that gives you the future value. Minus the value of the dividends gives you the future value of what that futures contract should be at expiration. And currently, because the dividends are so high, they're applying a heavy negative versus the interest rate that you'd have to pay to hold those products. That is why backwardation occurs. And so it's something we've been living with for a while. Very low interest rates, high dividends on the S&P 500 stocks will give us the situation where the cash index is trading at higher prices, and future expirations, future contracts are worth less than the current contract. So right now, the December contract's trading at a higher price than the March contract, and that's called backwardation. Anyway, if you want further information on that, it's easy to look up. It's a common thing. We're either in contango, which is the normal behavior, or backwardation. Contango is when the future value of current prices is higher than what current prices are. Anyway, little thing you should know, I guess, for futures. I'll leave you with that. Good luck, and I'll catch you tomorrow. Take care.